Welcome to the FinTickAI Quantitative Report for February 12, 2026. Our analysis focuses on the Great Sectoral Rotation, where divergent performance signals a shift from growth towards stability. Note the Nifty 50 and Bank Nifty performance figures displayed here. The Nifty 50 performance snapshot shows a bearish engulfing pattern. Heavy selling in IT negated early week gains, pushing the market into a short-term corrective phase, with supply dominating near the 25,950 zone. In the Nifty 50 trend analysis, the 20-day EMA was breached, signaling a loss of short-term momentum. The 50-day SMA at 25,640 is now the primary structural support. This breach suggests short-term bulls have lost control to intraday supply. For momentum and volatility, the RSI is neutral at 51.2, cooling off from its peak. India VIX spiked to 11.74. Volatility is increasing as the index searches for a new floor, suggesting potential for further downside testing. The quantitative drill down confirms a bearish crossover on the MACD 1-hour timeframe. The ADX index is weakening at 21.5, suggesting consolidation ahead. Short-term indicators align for sell-on-rise behavior near the 25,950 resistance zone. In contrast, the Bank Nifty shows relative strength and resilience, closing nearly flat at 60,739.75. It outperformed Nifty 50 by about 0.60%, with private banks acting as market stabilizers. The candlestick is an indecisive doji near 52-week highs. Bank Nifty participation shows a 15% increase in volume versus the 10-day average. Aggressive put writing at the 60,500 strike provides a strong institutional floor. Banking majors are seeing accumulation on intraday dips. Key alignment indicators for Bank Nifty show price compressed near the upper Bollinger Band, signaling a volatility squeeze. The ATR status is stable, suggesting controlled movement despite broader market turbulence. These are the critical support zones for both indices. For Nifty 50, the immediate support is 25,700, and the swing floor is 25,580. Reaching support 2 in Nifty 50 could accelerate selling toward the 25,400 zone. Reviewing strategic resistance zones, Nifty 50 has resistance 1 at 25,950, which is a flipped support level. Our initial bearish bias in Nifty remains active until 25,950 is reclaimed on significant volume. Regarding today's news impact, we observe bearish IT sector liquidation due to AI-led margin concerns. Bullish bank credit growth is absorbing the market's sell-offs. Macro sentiment is neutral with flat U.S. futures. Our probability model for Nifty 50 shows a 50% chance for a bearish trend. The breakdown of the 2-0 EMA and intense selling in the IT sector suggest further corrective action is probable. For Bank Nifty, the highest probability is a sideways or range-bound base at 50%. Strong volume support and accumulation suggest that banking will anchor any potential market recovery. Our strategy for the next session is defensive, given the weak Nifty and resilient Bank Nifty. For IT allocation, use intraday rallies to trim exposure. Look for dip buying opportunities near the 60,500 pivot for Bank Nifty. Please note the official SEBI disclaimer. Investing in the securities market is subject to market risks. This report is data-driven and for informational purposes only. Always perform your own research or consult a qualified advisor.